Hey everyone, welcome back. We're diving deep today, getting into something I know is on a lot of minds out there, making sure you've got a solid plan for retirement.
Absolutely. That's huge.
And for today's deep dive, we're zeroing in on one particular product that is designed to help you do just that. The Oxford Life Select Series Fixed Indexed Annuity.
Okay.
We're going to unpack what it offers, especially when it comes to generating that reliable retirement income, that steady stream of money, the kind most of us hope to have in our later years.
Yeah, it's really all about, that peace of mind in retirement.
Exactly. And that's really appealing, right?
Right.
To know that there's a plan in place. So let's get right into it. What's the deal with fixed indexed annuities? I mean, how are they different from other annuities out there?
Well, this type of annuity is interesting because, well, you see, it aims for this balance, a balance between growth potential, but also protection of your original investment.
Okay, so less about the risky ups and downs and more about, a comfortable ride with a nice view along the way.
Okay.
But how does that actually work? I mean, how do you get that growth and protection at the same time?
Sure. So with a fixed indexed annuity like this one, the potential for it to grow is linked to how a specific market index performs. In this case, we're talking about the S&P 500.
Got it, the S&P 500. But wait, doesn't that mean you're basically, like, directly investing in the stock market?
Well, not quite. And this is where the protection part comes in. You see, your principal, that initial investment you put in, it's actually shielded from any losses if the market happens to, well, take a dip.
Oh, I see. So you're kind of riding the wave of the stock market, but with, like, a safety net underneath.
You got it. That's a great way to put it.
So you benefit from the gains, but you're not, like, free-falling if things take a turn.
Exactly. Think of it like this. It's like having a car.
Okay, I like where this is going.
It's like having a car with a super powerful engine for those, uphill climbs when the market is doing well. But you've also got those strong, reliable brakes to keep you safe if there's a sudden downturn.
I love that analogy. So you get the power and the security all in one package.
That's the idea.
Okay, that makes a lot of sense. And it looks like the Select Series actually offers a few different ways to link to the market.
Hmm.
In the materials, they talk about something called the fixed account. Then there's a monthly average and also an annual point-to-point index strategy.
Yeah.
Can we break those down a bit?
Sure. So basically those are, well, they're like different crediting strategies. Basically, they're just different ways of calculating how much your annuity might grow, based on what the market is doing.
Right, the different ways it's connected to that S&P 500.
Exactly. So you've got the fixed account, that's kind of your slow and steady option. It provides this, well, stable, guaranteed interest rate.
Okay, steady and predictable.
Yeah.
Got it. What about the monthly average?
Right. So the monthly average, that one, well, it tries to capture the average of how the index performs each month.
Okay.
Now, this one could potentially lead to, more growth in the fixed account, but it also comes with, a little more of a roller coaster feel.
So a bit more risk, but maybe a bit more reward. And what about the annual point-to-point?
Yeah, so the point to point, it's really focused on how the index does at the beginning of the year compared to the end of the year. So if the market has, a banner year and goes way up, you could see higher gains, but if it stays flat or drops, then you wouldn't get anything.
Ah, so that one's a bit more like all or nothing.
Yeah, you could say that.
Higher risk, higher potential reward. So it sounds like people have choices, different strategies to pick from depending on how much risk they're comfortable with.
Exactly. That's one of the, well, appealing things about this type of annuity. It's not one size fits all, You can kind of tailor it to your own, well, risk appetite and what you're hoping to achieve.
Yeah. And let's be honest, I think for many of us, when we picture retirement, what we really want is to know there's going to be that steady, reliable income coming in.
Of course, that's the dream, right?
Yeah, absolutely. And that's where this Guaranteed Lifetime Withdrawal Benefit rider, or GLWB, that's what they call it, comes in. The Oxford Life Select Series really highlights this as a key feature.
And it's a major selling point for folks who are, really focused on that predictable income in retirement. Essentially what it does is, well, it lets you start taking withdrawals from your annuity, and those withdrawals are guaranteed for the rest of your life.
Hold on. Guaranteed for life. How is that even possible? What if the market tanks or I live to be 120?
Well, the guarantee comes from how the rider, this GLWB, calculates your income base. It starts with your initial investment, and then, well, it applies what they call a roll-up rate, usually for the first 10 years.
Right?
And with the Oxford Life Select Series, that roll-up rate is 7.55% each year.
Wow, 7.55%. That's pretty impressive, especially these days.
It is. And what really makes it powerful is the magic of, well, compounding.
Ah, yes, the snowball effect. The longer it rolls, the bigger it gets.
Exactly. So each year, your investment isn't just growing by that 7.55%, but the interest you earned the year before, well, that also starts earning interest and so on. It really adds up over time.
So this 7.55% guaranteed roll-up, how does that compare to, say, bonds or other, like, safer investments that people might look at?
It's a good question, and you always want to compare. I mean, while the guaranteed growth of the GLWB rider is certainly attractive, it's important to keep in mind that with other investments, well, the rates can go up and down.
Right.
They're not fixed, so you have to weigh that.
Okay, so even with a guarantee, you're saying it's still important to think about what's happening in the economy as a whole. What else should we keep in mind with this rider?
Well, flexibility is another big one.
Oh, right. You mentioned that. What does that mean exactly?
Well, with the GLWB, you usually have the option to, start your withdrawals, stop them, adjust them as you go throughout your retirement.
Okay, so it's not like you're locked into a certain amount forever.
Yeah.
You can adapt as needed.
Exactly. And another really important point is that, well, many GLWB riders, including this one, offer something called spousal continuation benefits.
Spousal continuation benefits. What is that?
It's great. So basically, if something happens to you and you pass away, your spouse can continue to receive those guaranteed income payments.
Wow, so there's like a safety net there for couples. That's huge.
Absolutely. It can provide a lot of peace of mind, especially during a difficult time.
Yeah, absolutely. Now, while we're all hoping for, long and healthy retirements, I think it's also important to think about what happens to the annuity when we're no longer here.
Right, of course.
Does the Select Series address that at all?
Yeah, it does. The Select Series, like a lot of annuities, has a death benefit built in. So if you pass away, your beneficiaries, the people you've designated, will receive whatever the accumulated value of the contract is at that time.
Okay, so it's not like the money just disappears.
Right. And they even have an option to convert that death benefit into a guaranteed lifetime income stream for the beneficiaries.
Oh, interesting. So that money can continue to provide
Yeah.
for loved ones. That's a nice feature. Okay, so we've talked a lot about the income side of things, the retirement part. But what about before retirement? What if you need to access your money? Is there any flexibility there?
Yeah, there is some. The Select Series, like most annuities, will let you withdraw up to 10% of your contract value each year, penalty-free.
Okay, 10% per year, so that's good to know. That gives you some breathing room if something unexpected comes up.
Exactly. And they actually have some additional provisions for situations like if you need to go into a nursing home or if you have a terminal illness or need home health care. In those cases, you can access more of your money without having to pay those surrender charges.
Oh, okay, so they do have those exceptions built in. That's important to know. But you did just mention surrender charges. What are those exactly?
So surrender charges are basically fees that the insurance company might charge you if you take out more than that allowed amount, more than that 10% before a certain period of time. Usually it's like the first 5 or 10 years of the contract.
I see. So it's kind of like an incentive to stay the course, keep that money in there.
Right. The idea is to, discourage people from taking money out too early, because that can affect the stability of the whole annuity for everybody.
Makes sense.
So it's a trade-off, right?
Right. You get those potential benefits, the growth, the guaranteed income. But there are some limits on how freely you can access the money early on.
Exactly. It's all about understanding those restrictions and making sure they fit into your overall, retirement strategy.
Definitely. Now, you also mentioned earlier something called a market value adjustment, or MVA.
Oh.
Can you explain that a bit more? I'm not really sure what that means.
Yeah, so an MVA is something that, it could come into play if you decide to take a withdrawal, especially if it's, a larger withdrawal, more than that penalty-free amount.
Right.
It's basically how the insurance company adjusts the value of your withdrawal based on what interest rates are doing at that time.
So it's tied to those current interest rates.
Mm-hmm.
And how does that work? I mean, what does it mean for the person taking the money out?
Well, if interest rates have gone up since you first bought the annuity, then you might actually get a little bonus on your withdrawal. But if rates have gone down, then the MVA could actually, reduce the amount you receive.
So it's a way to keep things, I guess, in line with what's happening in the market.
Yeah, that's the idea.
Okay, so it's a lot to think about with these MVAs. Now, standing behind all of this is the Oxford Life Insurance Company. Can you tell us a bit about them? What kind of company are they?
Well, they've been providing retirement solutions for well, for quite a while now.
Yeah.
And, whenever you're considering any kind of financial product, it's really important to, well, do your research on the company that's offering it.
Absolutely. Do your due diligence.
Right. And Oxford Life has a solid reputation. They're known for, well, for their focus on financial stability. And that's really key when you're, entrusting them with your retirement savings.
Makes sense.
Oh,
Okay, so to sum it all up, it seems like the Oxford Life Select Series fixed indexed annuity offers this kind of unique combination. You get the potential for growth that's linked to the market, but you also get that safety net to protect your principal.
mm-hmm.
And it sounds especially appealing to those folks who are really looking for that guaranteed income in retirement, with features like the GLWB rider. But like we've been talking about, it's not necessarily a one-size-fits-all solution.
That's right. There's a lot to think about. And, while this deep dive has given you a good overview, the most important takeaway here is this. Choosing the right retirement product, well, it's a very personal decision.
Absolutely.
You really have to consider your own individual circumstances, how much risk you're comfortable with, and what your long-term goals are.
So many factors.
And talking to a qualified financial advisor, that can be incredibly helpful in sorting through these choices and finding what truly aligns with your needs.
Great advice, great discussion today. Thanks for breaking it all down.
Of course.
And until next time, everyone, keep planning for that